This is the Daily Market Comment at XM.com for Friday, March 31st by Ref Boyajian. I'm Christina Marujos. Equity markets may have taken a strong knock from the banking crisis, but the speed at which they have bounced back is probably just as surprising, as they are well on their way to ending the quarter with solid gains. Much of the rebound is being led by technology shares, particularly the big tech on Wall Street. There's been a notable divergence between the Nasdaq Composite and Nasdaq 100 since the SVB-induced sell-off, as the pandemic darlings such as Apple and Microsoft have seen their defensive appeal come back into play. In contrast, smaller tech rivals have been struggling due to fears of a liquidity crunch. The Nasdaq 100 closed at its highest since August 2022 on Thursday, but the broader Nasdaq Composite is yet to surpass its February pre-crisis peak. Overall sentiment is being propped up by dovish Fed bets. The expectation that the Fed and other central banks won't be raising rates as high as previously envisioned and could even start cutting rates later this year has gone a long way in easing the panic. However, the odds that the Fed will hike one final time at its next meeting have crept up slightly after several Fed officials signaled that more tightening might be needed to bring inflation back to target. The greenback is advancing against all its major peers on Friday, even as it's set to finish the quarter with losses of around 2% against currencies like the euro, sterling, and the Australian dollar. Only the yen is headed for substantial losses, and it continued to slide on Friday. A stronger than expected CPI print for the Tokyo region for March was unable to provide much of a lift to the Japanese currency. It was a different picture in the euro area, as headline inflation was softer than expected in March's flash reading, and the euro slipped even though underlying measures inched up. Next to come under the radar are the PCE inflation and personal incomes and spending numbers out of the United States. The core PCE price index is forecast to have stayed unchanged at 4.7% year-on-year in February. A positive surprise could further push up bets for a Fed rate hike in May. This was a Daily Market Comment here at XM.com. Have a great weekend.